let's just jump right in. This is the first loss of the year. This came on a demand setup. So today is January 13th, Tuesday. I did trade last week. It was my first week back. I traded Monday, Tuesday, and Thursday. All three were wins. And then yesterday was Monday. I traded and it was a winning setup. So I was 4-0 going into today. We took our first loss of the year. I was expecting it. When you're on a winning streak, you kind of ask yourself, like, when is that loss coming? But I was happy with this setup. I'll take it over and over again because I did like it a lot. Now let's get into it. So this was a demand setup. The session opened up actually at the demand setup, so at the demand candle. So right here, this gray candle, it's my red candle. This is the demand candle. The reason why it's our demand candle is because we have big buying pressure out of it. That's why it's a demand candle. We have nice candles coming out of it, and then we have a retest. So this is a great demand candle, and there's a gap. So basically we want buying to come out of it. We want to retest, tap into our zone, this box that we created, which is the candle from top to bottom, and then we want to see it retest and reject and go back in our favor. So this candle right here, this one right here, is the candle that tapped in first, right? So let's put this in rewind and let's watch the trade play out. All right. Okay, so at this point the market opened right here at the demand candle. So we can see at this point we see big buying pressure coming out of it. So we're marking this demand zone. In real time we're marking it, and this will be we're looking for a retest. Now we are trading in gold all-time highs. This is the all-time high for gold, and this happened yesterday. So that was one thing that I was a little worried about, is we're trading in all-time highs, but I took the chance because gold is good for it. Now this candle doesn't tap our zone. This candle doesn't. This candle does. So now when we get a candle tap into our zone, at this point of the day, I'm looking to enter up here. So if this next candle breaks above this candle, I'm getting in. So I have my order right there, and then my stop loss will be right under this candle. So a 16-point stop loss. It is a little big for gold, but let's see what happens. So this would be the original entry if this next candle breaks above this previous candle. Alright, so let's see what happens. So it doesn't. This candle, this is the highest of the candle. So now our entry would be on top of this candle, but we're going to keep the stop loss down here at the original candle that tapped. So now we literally cut our stop loss in half. This is how the strategy is. This is how I like to use it. So now this next candle that forms, we want to break this. What happens? We get it. So I enter right here about 9:10. We enter stop loss down here, and then it was an 8.5 point stop loss. Now what we do see here is that this green candle, I have it white and gray, but this one is a green candle. It broke past our 13 EMA. So it's kind of like a 13 EMA breakout, but this candle is not a nice 13 EMA breakout candle, but it's good for us because we're already in the position, and then we see the market, the candle wanting to break through. Wonderful. Now what happens is right away we get stopped out. So I was okay with this because we had a demand candle with a gap. So let's go through our checklist here. Let me pull it up on my other screen. Whoops. Alright. So this is my demand checklist. I'll read it. So EMAs in the correct order. Let's see, are the EMAs in the correct order? For buys, we want the blue 13 EMA above both of these lines. Great. We want the yellow 50 SMA in between the blue and the white. We want the white 200 EMA on the bottom. So we want it to go blue, yellow, white. That looks great for buys, right? Do you see here when the EMAs are together, you know, if they're crossing over each other, we don't have a clear direction. It's, you know, we're, look. And then when they get, you know, when they separate, now we have movement. So for buys, we want the blue above the yellow above the white. 13, 50, 200. That's a check. The next one, is there a gap? Does this demand zone have a gap? Now, where do we find that? So, this is our demand candle. We have a gap right here between this, the next candle from the demand, into this candle. So I'll mark up my demand, my gap right now. This line to this line. This is our gap. So essentially, we want price to break out of the demand zone nicely, and then we want to fill in the gap. Now there's demand zones without a gap. That's low probability. We want gaps, that means high probability. So now we have this gap right here. We're going to fill it. We filled it, and now we get the tap. Okay, let me delete this. The next one, are we going with the trend? Are we going with the trend? Of course we are. We're, you know, a lot of green candles here. And then the next one, are there breaks of structure? Of course there are. We keep breaking structure, right? So this is a structure, structure, structure. We keep breaking structure. Yep. All right. And now the next one, any candles close inside the zone? Let's see. So with demand, supply and demand setups, we want no candles closing inside the zone, but it's really up to our discretion whether we take those setups or not if they close inside the zone. So the next candle, let's see, it closed inside the zone. We would like it for it to tap and reject the whole zone. It doesn't, it's okay. I do like this setup still. The next candle, we're in the zone, and then we break out of the zone. So we enter up here. So we'll say no. There were candles that closed inside the zone, so we don't get a check mark for that. And then that's our supply and demand checklist. So EMA's in the correct order. I would say yes, because they are in the correct order. Down here they weren't, but right here they are. And then break of structure, we're breaking structure to the upside. Going with the trend, obviously we're going with the trend. No candles inside the zone, that's where we get our X. And then that's it. So just to recap, I have 5 checklist boxes. I have 1 that is marked with an X, which is the candles closing inside of the zone. So I'll take this setup. It unfortunately doesn't go in our direction. I love this setup though, because it's, you know, everything's looking good. Now let's look at the 15-minute. This right here is gold all-time highs. This happened yesterday. So we hit all-time highs, we marched down, and then in our trading session this morning, we reject the all-time highs. It is what it is. You know, I took the chance to break all-time highs, but you know what, a loss is a loss and we move forward. But altogether, that's the demand setup. I mean, I really like this one. Yes, are we trading in all-time highs? Guess what, if you're a gold trader, get used to trading all-time highs, because even last year, the end of last year, gold was making all-time highs. You're constantly, you have, you know, if you look left, there's a lot of the times there's not going to be any data because we're at all-time highs. So you know, it's going to be a little challenging to do that, but I took the chance. I know gold is going to keep increasing in value, so we have to take the chances. But all in all, that was the first loss of the year. I would take the setup always if it presents itself. But other than that, peace.